Hey everyone, it's Dave Welch here, and here for your weekly update on ARKG, ARKK, and ARKQ. Plus, I want to talk about the ARK Space Exploration ETF and its expected release date, plus what to do in the event of a market downturn. So, to begin with, I have a video here that from Kathy Wood of the ARK Weekly Update. Okay, I got my weekly update from Kathy Wood here. She starts out with HIMS, which is Hims and Hers Health, a newly public telemedicine company focused on removing the stigma associated with historically taboo health subjects, traded up 16% on Monday. The price action may have been caused by institutional investors building positions at the same time that Robinhood removed HIMS from its restricted list. Castle Biosciences, ticker CSTL, traded up roughly 15% on Tuesday, possibly in response to target price increases at both SVB Leerink and Canaccord Genuity. In addition, speculators may have purchased CSTL in anticipation of the annual South Beach Symposium, during which Castle presented positive data on the performance of its DecisionDx melanoma test that improved risk stratification for patients with smaller T1 melanomas. Codex's, ticker CDXS, a protein engineering company, closed up 15% on Tuesday, perhaps because of increased investor confidence in its protein engineering platform, Code Evolver. Recently, Google's DeepMind announced AlphaFold, a neural network-based algorithm that can predict protein folding, causing elevated interest in the space. 901 Devices, ticker MASS, an analytical tools company focused on decentralizing and lowering the cost of mass spectrometry, traded up nearly 16% on Tuesday. We believe in response to investors' increased confidence in the more nascent proteomics space. Stifel Cohen and SVB Leerink all initiated en masse with either buy or outperform ratings. Virgin Galactic. Here we are again with Virgin Galactic, ticker SPCE. I like to call this ticker space. Anyway, Virgin Galactic was up 30% and 21% on Monday and Wednesday, respectively, after announcing the date of its new test flight window. Opening on February 13th, the window is likely to provide several opportunities during the month to fly. The flight will test the answers to challenges that surfaced during the last test flight in December. So I mentioned this last week about Virgin Galactic, and you can look at my last week's video more on that. So it was up last week, and it is again up this week. Moving up next is Agora Inc., ticker API, rose 30% and 21% on Monday and Wednesday, respectively, seemingly in response to the rapid growth of Clubhouse, one of its increasingly popular customers. Agora is an API-based real-time communications company in China, enabling live video and voice engagements at large scale. Selectus, ticker CLLS, a biopharmaceutical company that harnesses the power of TALENs, a gene editing technique to create immunotherapies, traded down 20% on Wednesday on little news that we could discern. Evogene, ticker EVGN, a computational biology company, closed up 16% on Thursday, perhaps in response to news of the availability of call and put options on its stock. Skills, ticker SKLZ. Okay, so this Skills that she talks about the NFL. So it rose 25% on Thursday after announcing a deal with the National Football League to develop a mobile NFL-themed game. The two sports organizations will host a competition for developers around the world to create an NFL-themed mobile game, ultimately with the hope of introducing hundreds of millions of NFL fans to the Skills esports platform. So yeah, the skills has been in the news a lot lately because of the NFL. Twist Biosciences, ticker TWST, fell approximately 17% on Friday after reporting fiscal first quarter results that outperformed analysts' expectations on both the top and bottom lines, but leaving 2021 revenue guidance unchanged. Moreover, its new manufacturing facility in Oregon could prevent gross margin expansion in 2021. Our confidence in Twist remains unchanged for multiple reasons. The company's investments in capacity should contribute to margin expansion over the long term, galvanized by secular growth in the synthetic biology and liquid biopsy markets. In addition, we believe Twist's data-driven approach to target enrichment for next-generation sequencing, NGS, is best in class, especially for more esoteric biomarkers such as DNA methylation, which are difficult to detect in liquid biopsy. Wow. The jargon in this genomic space is really difficult for me to read off for you. So I'm reading it for you so you don't have to yourself. So correct me in the comments below if I'm mispronouncing any of these words. So the next company is Bill, ticker BILL. It rallied 25% on Friday after reporting strong results. Bill saw 59% core revenue growth, driven by a 33% increase in subscriptions and a 98% jump in transactions. Meanwhile, Bill.com continues to invest in R&D and channel partner products, expanding its total available market. Bill.com automates back-office finance operations for small and medium-sized businesses through its accounts payable software and B2B payments network. Okay, so this next video that I made, I talked about the ARK possibilities that could go into the ARK space exploration ETF. All right, so for my Arkx possibilities, I have a list here that I've been generating. What I think Cathie Wood may or may not put into, most likely these might go into Arkx because they're already in the other ARK funds, one or more of the other ARK funds, including ARKK and ARKQ. So, for example, SPCE is Virgin Galactic's holdings. And here it is. This is my TD Ameritrade app. And you can see that it is, and its 52-week range is started at $9 a share. Its 52-week high is $62.80. We're pretty close to that 52-week high as a close of business Friday at $54.34. Market cap. Okay, wait a minute. Where do we go? Where is market cap? Here it is. Market cap, 12 billion, 12.7 billion, almost 13 billion. And then short interest as of January 15th was 27% of the float. That's kind of an old number. We're already into February. So it's hard to get these short interests. That's one thing I think Congress is going to change to the SEC they're going to make, I would like them to make short interest more transparent instead of posting it like once a month or once every 2 weeks. So, all right, so back to the list. The next on the list, we have Rockwall Automation. This may not go into this fund. Now, one of the things I saw on the SEC filing for ARKX was the anything from this above the surface of the earth. So any company that operates businesses that are above the surface of the earth. So that could be 1 inch above the surface. So like a drone, all the way to nearby stars. Basically astronomical. No pun intended. So I added Rockwell because they're into robots, market cap 28 billion, and robots can include drones and satellites because a lot of satellites up in orbit right now, including Starlink satellites, which is owned by Elon Musk, are indeed robots. So I think robots are going to be more and more into aerospace, in the aerospace industry. Okay, Lockheed Martin, they're a defense contractor, among other things. Market cap is $94 billion. Annual dividend, look at that, 3% annual dividend. And it is only shorted 1% of float as of last month. So it looks like those hedge funds are not interested in shorting Lockheed Martin. Amazon, okay. So Amazon is, it's Jeff Bezos, as you know, is going to resign as CEO, but he's going to go into other businesses underneath the Amazon umbrella. He's still going to be the chairman of the board. And one of his favorite hobbies is rocketry with Blue Origin. So expect that. So market cap is $1.6 billion. We are close to the Amazon is close to its 52-week high at this price of $3,300 a share. It is not hard. It's barely shorted at all. 0.73% of float is shorted. And then Elbit System, which is an Israeli company, they're an Israeli defense contractor, but they're heavily into their defense business as well as the United States defense contracting business. They have a $6.24 billion market cap. Only 0.29% of float is shorted. And I used to not pay attention to this float stuff, but now I do ever since this whole GameStop fiasco and Robinhood. So, and Wall Street Bets, it's kind of like, this is interesting. And I think a light is going to be shined on all these shorters. So Honeywell is the next one. They're also a defense contractor. Let's see, where is market cap is $142 billion. It's valued larger than Lockheed Martin, it seems. 0.75% of float is shorted. Okay, large cap. Iridium is also believe it or not, it is a defense contractor. Its market cap is only $7 billion, so it's not quite as a mega cap as the other one, like Honeywell. Trading at $54 a share. 4.6% of its float has been shorted. So that's it with Iridium. FLIR, they do infrared systems. Also a defense contractor, $7 billion market cap with a $53 a share, and 1.57% of the float is shorted as of last month. And then I added this SPAC at the bottom, Holicity, which is it's very speculative. I don't know. I'm keeping this on my watch list, but I don't think Cathie Wood would invest in this. Simply because it's, it is a SPAC. She does, I think, invest in SPACs if she knows what's going to happen with them. So this SPAC is going to usher in Astra, which is a rocket launch company. They launched some rockets out of Alaska, the southern coast of Alaska, I think, off the Kenai Peninsula, I believe, or Kodiak Island. And so they just were able to launch rocket and put some stuff into orbit. So they just had their successful launch a week or two ago. Anyway, market cap for this SPAC is just under $1 billion at $726 million. It is only 0.36% of shares are shorted. So they don't tell you too much in here, but I did find out from doing, a lot of research that this will be the SPAC that will bring Astra to IPO. Not sure when that's going to happen. Speaking of IPOs, Arkx, I think, is expected to IPO by April or May because their SEC filing said it's 75 days from the date of their issuance or filing with the SEC. And I'll pull up that file in another video. Okay, here's the webpage of Astra. Right on the front page, it says, "Hello, NASDAQ. Astra is going public. And then they, have a link here to watch their live video. And then here's a quote from their CEO. He says, Astra is becoming a publicly traded company to accelerate our journey to make low Earth orbit the next frontier for human innovation, enabling a new generation of space services with frequent, reliable, and affordable launches. Together, we're going to make life better here on Earth. And that's from Chris Kemp, founder, chairman, and CEO. So I'm just going down the page here. They have a bunch of videos. They're not as they don't upload video, like they don't have live videos like SpaceX does. Elon Musk, they always have a live feed of their launches, and sometimes they'll have a live feed of their test launches. Not always, but sometimes they do. Like for example, their SpaceX's SN9. They had a live video of that, and it had a pretty spectacular rapid disassembly when it collided with the Earth at over 120 miles an hour. So, but anyway, Astra has also had accidents on their test flights. So it seems like no rocket company is immune to this. So let's read the press release. With Holicity. Okay, so Astra to become the first publicly traded space launch company on NASDAQ via merger with Holicity. So Holicity is a SPAC, and I covered that on in a different part of this video. So he says, here's the report from Astra. So it is the fastest privately funded company in history to demonstrate orbital launch capability, and Holicity Inc., NASDAQ HOL, a special purpose acquisition company, SPAC, today announced a definitive business combination agreement that will result in Astra becoming a publicly traded company. The transaction reflects an implied pro forma enterprise value for Astra of approximately $2 billion. Upon closing, the transaction is expected to provide up to $500 million in cash proceeds, including up to $300 million of cash held in the trust account of Holicity, and an upsized $200 million PIPE led by funds and accounts managed by BlackRock. This transaction takes us a step closer to our mission of improving life on Earth from space by fully funding our plan to provide daily access to low Earth orbit from anywhere on the planet, said Chris Kemp, the founder, chairman, and CEO of Astra. He said, I have long believed space provides an unmatched opportunity to benefit and enrich society. And he goes on to say, Astra's space platform will further improve our communications, help us protect our planet, and unleash entrepreneurs to launch a new generation of services to enhance our lives. In December 2020, Astra joined a small elite group of companies that have made it into space, with over 50 launches and manifests across more than 10 private and public customers, including NASA and DoD. Astra has booked over $150 million of contracted launch revenue. Astra will begin delivering customer payloads this summer and begin monthly launches by the end of this year. Following the closing of the transaction, the combined company will continue to be led by founder and CEO Chris Kemp. It is expected that Craig McGaw will join Astra's board of directors. The proposed transaction, which is expected to be completed in the second quarter of 2021, has been unanimously approved by the board of directors of both Astra and Holicity and remains subject to approval by Holicity's stockholders. Upon the closing of the transaction, the combined company will be named Astra and will be listed on NASDAQ under the symbol ASTR. So I'm going to add that to my E-Trades Arkx list. So not sure Arkx is going to go after that, but I'm putting it on that list. And if they don't, I might invest in this. It'll be one of the only few companies that I will invest in once they become ASTR. I'm not going to invest in HOL, but once it becomes ASTR, I'll probably put my money there. I don't know. Let me know in the comments if you think I should buy shares of HOL if Arkx does not purchase that. Anyway, thanks. Okay, next I want to talk about the SEC document I pulled up and the expected release date of the ARK Space Exploration ETF. Here is the SEC filing for Arkx from ARK Investments. It's the N1A, Form N1A, filed with the SEC on January 13th, 2021. And right at the top here, it says, it is proposed that this filing will become effective, and they checked 75 days after filing pursuant to paragraph Alpha 2. So I looked at this before and I was like, okay, where's Alpha 2? So it is, the way these forms work is not very user-friendly. So I'm scrolling down. Wait, is there anything that says Alpha 2 up here? But basically, I would think that means it's 75 days from January 13th, which puts it around April time period, maybe even late as May if everything, if there's any hiccups. But I could tell you right now that Kathy Wood and her team are actively researching companies to put into this Arkx fund. So let me scroll through here and see if there's anything that jumps out at me. And I believe it's going to be the same as their other funds. It's going to be charging a 0.75% management fee. Not sure if it says that in here anywhere. So yeah, a lot of this is boilerplate. But anyway, yeah, from the top of the fund, it was filed January 13th, and they're going to do initiate it 75 days from the date of this filing. So that's what I have for now. Okay, so now I'd like to talk about what to do during a market downturn. So one of the things I always do, and it's always benefited me, is I always dollar cost average. And I learned this quite a while ago during my college days, and even more recently, more expert way. My company does it really well in my 401k. And no matter what, it's always taking money out of my paycheck, always depositing it to my John Hancock 401k account. And even during market downturns, the biggest market downturn of March last year, I invest 100% aggressively, and which means I invest in funds that are in high technology stocks and what else? So even, like Tesla is in one of the funds in my 401k. So that, and I believe Tesla is a very aggressive stock to be invested in. So I'm invested indirectly through my 401k. However, okay, so back in March, my 401k, actually it started in February, my 401k balance started heading south. And at its lowest point, it never got to my total principal plus my employer's contributions. It never got below that. So it got pretty close. It got within, I would say, maybe 20% of it, but it never went into my principal. So basically, if you talk gambling talk, I'm always been playing, since I've invested in my 401k, I've always been playing with the house's money. So it's, in other words, like all my winnings is what is going up and down in the market. And having learned that, so basically that's dollar cost averaging, which means every 2 weeks or once a month, no matter what's going on in the markets, you're always putting the same amount of cash into your most, or the stocks that you have the most conviction of. So, and then, but if you're a little squeamish about investing right now because the markets are too high, what I would recommend, at least for myself, this video is for entertainment and educational purposes, and you want to talk to your financial advisor before doing so. But you hold on to your cash for a little bit until you see the market dip. When it dips to its lowest levels, hold on to your portfolios. Don't sell them unless you're really good at this and your financial advisors tell you to do so. But yeah, you don't sell anything. You hold on to your portfolio, wait until the market hits its lows, then buy. Buy. Like it's like a sale at one of your big discount stores, or even online sales. Like it's a giant coupon on stocks. So, and I only invest in ETFs, but I do talk about individual stocks because those are what make up these ETFs. So, for example, in the ARK funds, ARKK, which that's mainly in innovative and disruptive companies. Its number one stock is Tesla. So I always keep track of Tesla and what Elon Musk is up to. So, but anyway, back to what to do during if a big market downturn. I invest cash into the lowest. What I'm going to do is hold on to a little bit of cash, because basically right now I've got real little cash sitting on the sidelines. But when I get money, I'm going to deposit it, hold on to it until one of my ETFs. So like right now in my regular brokerage account, I have QCLN, which is the First Trust Green Energy Fund. And then I also have ARK Genomics, which is ARKG. And then I have SPTM, which is the S&P Spider Total Market Fund. Whichever of those funds, first of all, is most affordable. Second of all, I have the highest conviction of. And then third of all, has the best performance, past performance. But of course, past performance is not indicative of any future performance. And I'm pretty sure your financial advisor is going to tell you the same thing. So what I'll do is wait until, it takes a significant dip. And if I see that it hits a bottom period, one of the things I learned was looking at candlesticks. And when a candlestick, and you can Google this, when a candlestick hits a morning star, that's when you should start putting in your buy orders. And if you're a day trader and you have a lot of expertise at this, you can look at the candlesticks for an evening star, which is at the top of the market. The candlestick, it's like a little plus sign at the top of the market. And then you'll see right after that plus sign, the market will start to decline. So I was pretty good at paying attention to those, but I got burned a few times. So I like investing in ETFs, but you could still use the candlestick method with ETFs. So, and then a lot of people say, well, if the market's going to downturn, should I invest in cryptocurrency? Well, cryptocurrencies, in my opinion, is super high risk, and it's in a bubble right now. And I've even heard other advisors say that it's equivalent, the bubble that the cryptocurrency like Bitcoin, Dogecoin, and others like Litecoin are in right now. It's it's almost as speculative as the tulip bulb bubble back 200 years ago in the Netherlands. So, which is crazy. So, I listed out the risks of cryptocurrencies. It doesn't perform work. It's a commodity or a currency. It doesn't have any CEO, Chief Executive Officer, nor does it have any board of directors. And it might be banned by governments, which is also known as confiscation. So if you're invested in Bitcoin and all of a sudden the U.S. government says, nope, sorry, you can't invest in Bitcoin anymore, that's also known as confiscation. You wouldn't be able to get those funds back out of your Bitcoin investments. And then it's also got a very high, cryptocurrencies have a very high risk of theft. People hacking into your Bitcoin account and stealing all your money. Of course, they can do that with your cash account, but it just seems like that doesn't happen as often. Cryptocurrency totally relies on the faith of investors. So it doesn't have any balance sheets. You can't see what its assets and liabilities are. It just sits there and looks pretty. So now you're going to say, well, what about cash? Isn't it risk holding on to cash? Well, less risky than investing in a stock that may go way down and you lose all your money. Holding on to cash, you're only going to lose that amount that doesn't grow due to, like, inflation is going on. So say inflation's at 2%, but your savings account is only earning 0.25%. You're losing that difference in inflation and the the earnings that you're getting on the savings account. So in other words, it cannot beat inflation, any cash savings account. There are some, but they're probably high risky. I'm talking about FDIC insured savings account. But see, that's the other drawback. You can only FDIC insured up to $250,000 per bank account. There are exceptions to that. There's a clever little app called Wealthfront. I don't get paid by them, but I do have a Wealthfront account and I have savings over there. I want to say it's currently paying 0.35% per year, and they FDIC insure it up to $1 million. So I'll include a link to Wealthfront down in the description, but I'm not an affiliate with Wealthfront. I'll just put it there for your convenience. Also, with cash, you also have a moderate risk of theft, just like with anything. So it's no more risky than stocks. Actually, it's not nearly as risky as stocks, and it's no more risky than bonds. So that's all I have for today. Let me know in the comments what you think would be a good investment during a market downturn. All right, that's all I have for today. Thank you very much. Have a great weekend. Oh, and by the way, you'll see outside that normally all the videos I've filmed, it's been nice and sunny outside, but today it's snowing and raining. It's snow and rain mix, and it's freezing here in Yorktown. So I hope it's sunnier where you are, and enjoy the NFL Super Bowl tonight. Or NFL? No, just the Super Bowl. So have a great evening. Bye.